at the episode 100 first before you start getting crazy. Anyway, I think we're live now. So good morning, everybody. We just want to say thank you for all the viewers who have been here with us. As we're just saying, is our 11th Q&A session we've done since we started. We get some really great feedback from a bunch of people outside of Valiant and people. And I think we're hitting we're critical masses. There's people are liking things that I don't know who they are. So that's an amazing feeling. Like was Matt and I be like, do you know who that is? And we have no idea, which is great. I think it's kind of getting to a different place. But thank you, everybody. And if there's anything you want us to do, we'd love to send it into our website. We'd love to work on it with you. And so anyway, I want to introduce we have a very special guest today. It's our first time having a guest from outside of Valiant on our Q&As, and it's Josh Nance and Mike Miller from Blue Street Capital. Hey guys. And hey, thank you for coming on today. They're actually joining us from California, so they are up really early in the morning. Where the rest of us are like, it's already 10:30 here in New York and East Coast. We're kind of putzing around. They're up early, they're all cleaned up, ready to go. So it's great. Thank you.
Thanks for having us.
So, we know just a little bit why we picked this topic and why we picked working with Josh and Mike is that one of the things that I knew nothing about at all for years was about technology financing, working with companies to use a financing partner to get your this kind of advance your technology stack in your business to kind of get the goals you have done. Super important. Here at Valiant, we've used the past couple of years. We definitely work with a bunch of different vendors in this space. And Blue Street's definitely been one of our great go-tos. We love working with them. Super nice people, super personable. So before I get too deep into it, I just want to say, so if I'm going to pass over to Mike, ask some questions like, so who is Blue Street Capital? How did you guys get started? And, who are you? So that's it.
Well, first of all, George, you commended us for getting up so early and cleaning it up. I will pull back the curtain a little bit. I am wearing sweatpants below this collar shirt.
Who isn't?
The newscaster style.
Exactly. Sorry. No, but Blue Street Capital, as you mentioned, we are headquartered in Huntington Beach, California, down here, and we are an equipment financing company, which basically means that when customers are, focused on this project, making large-scale IT purchases, there's often a pretty large upfront capital expense that comes with that. So what we do is we come in, we structure flexible payment options, leasing or financing, and that way they can break those large-scale expenses down into small, manageable monthly payments.
Right, great. And so how did you guys end up working for Blue Street Capital? What's your background? How did you end up working in Huntington Beach, California, or LA, and kind of working for IT, this kind of financing company?
Yeah, well, actually, I moved to California about 5 years ago. Had a job in financial advising out here, and then I wanted to change from that. It wasn't quite my speed, and I was looking around, just kind of happenstance, came across Blue Street on a job board, and our headquarters are actually about 5 minutes from my house here in Huntington Beach, local, and it's still in the finance world, which I like. There's a lot of sales involved in it, which I also like, and really, it was the interview that kind of sold me on it, because once I got in the office, met the people, met our CEO. There's a really infectious culture here. Everyone's really focused on being an entrepreneur, not just an employee. There's a great work-life balance, and it's just pretty infectious from day one. So that's what
awesome. That's great. That's it. And Josh, what about you?
Yeah, same here. I mean, I moved down here from Seattle in 2016 with my former girlfriend, current wife. And I got down here. I had no idea what the equipment financing industry was, but I knew I wanted to be in technology. I wanted to be in finance. I wanted to find something within that realm.
Right.
And so I got a job at a financing firm, worked there for a little bit. Wasn't the best fit. And I had a recruiter from Blue Street reach out to me, and I saw technology financing, vendor focused. And I was like, what's this? So I took the phone call, set up a schedule, and it just spoke with our CEO, Dave Rhodes, and had a fantastic conversation. He told me about the values of the company, about where they were headed, about how they're a vendor-focused shop, how they want to just kind of change the game, be iconoclastic leaders, was I think the phrase he learned and he used against me. And I was like, okay, I kind of like that.
I like that. That's really cool.
And then went in, met the people. Like Mike said, the culture was just infectious, and I knew probably my first interview that I wanted to go work for them. And we've been growing ever since. It's pretty exciting, and I'm fired up to be a part of it.
That's awesome. I love it.
Yeah, question. You both use the term vendor focused. What does that mean? Like as opposed to consumer focused? You mean?
Yeah, exactly. So that kind of jumps in our next section about kind of what sets us apart from our competition. Right?
Exactly. Let's go. Dive in.
Great segue. Love it.
Yeah.
So vendor focus, essentially, we're not targeting customers directly all the time necessarily. What we'd like to do, we're not order takers, so to say. We like to establish partnerships with vendors such as Valiant. People who 10 to 1,000 employees, growing companies, because we know that we are a financial company. And with that comes an aspect of trust that you need to have with your customers, right? And your partners. So we're focused on developing partnerships and trust with vendors. That way, when you refer to a client of yours for financing, it's not, oh, I got this guy's name in the back of Rolodex. Here, try him out. This faceless character.
Gotcha.
No, it's, hey, we know these guys. We've been with them for years. We trust them. They can help you out here. We're focused on our partners' growth essentially, because it's anyone can call a company, a big, Fortune 500 company, and say, hey, what do you have on your pipeline? Can we finance a deal for you? No, we like to get in early and keep a relationship going and grow with you guys, because then it benefits both parties.
Absolutely.
And it's a two-way street, because we're not just asking stuff from you. We're providing you guys with leads, referrals, training for your sales team, consulting. We like to be product managers, so to speak. We kind of see ourselves as de facto employees of Valiant as well.
Right. I think one of the things that we see just in this space for years is that if you don't have someone that can help work with you and work with your clients, it's really hard for the clients to even understand what they're getting with a partner like this. In the past, where it's just confusing. People don't have the financial literacy. I mean, full disclosure, I didn't really understand this myself for years. I'm sure there's nuances of it that you don't understand, and you do it. It's like the first time you buy a car or buy a house. I think it's a very similar product. And, the first time I bought a car, I had no idea what I was doing. Kind of hustled through the car dealership, walked out of there with like a 9% loan, like crazy. And it was like more than 40% more than the value of the car, like some madness. And I was like, what just happened? And the thing is, and the dollars take the dollars out, but you don't feel comfortable because you're not educated, you're not informed. And that's one thing we really like about this kind of like more personalized thing, where we can say, hey, we can bring this to you, we can bring this to our customers, but we can also say, hey, let them educate you a little bit. Ask the questions. Don't be afraid to ask the questions. That's really the most important thing, I think. So beyond this, obviously you guys are in a partnership, that sort of thing. How's your business model work? What is it like? What is your how did you get started? What would you do? What had happened in this process?
Right. So essentially, let's say Chris Copeland, one of you guys salesmen.
Oh, sure.
Talked to him yesterday.
There he is.
So love Chris. So when he has a customer who's kind of balking at a price, or maybe doesn't have the cash flow right now, he'll bring us in, and we like to keep it really simple and efficient as far as the process goes. All we need is basically a quote on the project, the customer's name. We have a very quick approval process with our credit team, minimal documentation. Essentially, we structure the loan with the customer, right? Once they agree to those terms, they enter into that agreement with us, and we get Valiant paid in full up front.
Right.
I could talk to you for the whole 30 minutes here about what exactly happens, but that's
that's nothing. I mean, I guess in ways it's simpler than if they were just like trying to do a more traditional bank loan kind of setup where they line of credit and that sort of thing. This is a much faster, streamlined process.
Yeah, we think it's better for the customer as far as what you just mentioned about the efficiency of it. It's not all this red tape and mountains of paperwork. And also for our vendor partners, they much prefer them to come to us to a bank because we provide visibility in the whole deal. A lot of times we've seen customers go to banks, and then the vendor's sitting there for months without any idea what's really going on in that process.
I can see that.
With us, we are the full project managers for you guys. We keep you appraised every step of the way. Exactly what's going on.
Excellent. So what and during one thing that's a little more is what kind of options, like how is a lease and a financing, how's that work? Was there a loan? How do you guys structure what's the different deal options?
One of the terms I've heard before is dollar buyout, and I don't really know what that means. Like stuff like how does that work?
Yeah, there's a number of products that we use when it comes to offering financing to customers. Kind of to jump on what Mike said. I mean, we do consider ourselves project managers. When you introduce us to a client and a customer, we want to get to know them completely. We ask them all the questions about, okay, well, why are you guys acquiring this equipment? What are you guys looking to accomplish? What's your goal here? And what do you guys have planned for the future? And through those conversations, we understand what types of products we need to use. There's a true lease structure and a finance structure, and those are our two bread and butter products. A dollar buyout is a lease agreement where at the end of the term, say you have it signed up for 36 months, at the end of the term, the customer pays $1 and then they own the gear. A fair market value transaction is one where the customer signs up for, say, a 3-year, 36-month option, and they have 3 different solutions they could choose at the end of the term. One being they can continue to make lease payments. The other being they can return the equipment and refresh with new gear to avoid obsolescence. And then 3, they could purchase the equipment at the fair market value of the time. That one is very popular with technology-based companies because technology is just rapidly improving year by year. Right. And after 3 years, the product might become obsolescent. And so it needs to get refreshed and they need new stuff. The EFA, or an equipment finance agreement, is different from those first 2 options with the fact that the customer owns the gear, owns title to the gear the entire time. Whereas a lease, Blue Street Capital owns title to the gear, and then we lease it to the customer. Where an equipment financing agreement, it's basically treated as a cash transaction where, hey, you guys have the equipment, you guys just owe us the sum of payments, and at the end of the term, there's no payment, there's no dollar buyout, there's nothing. You guys own it, we see you later, and we're done.
Gotcha. And which one do you see more popular in this what you guys are riding now, especially now with this COVID-19 scenario? Which ones are you seeing kind of happening more and more?
Yeah, no, that's a great question. I mean, truly, the true lease or the F&B option is very big right now, just because customers don't know how long they're going to need that equipment. They need it now, right? Everyone's working remote. They need extra laptops. They need extra phones. They need all this equipment that maybe they can bring away from the office, and they had to bring to your home office and create this whole new structure. But say 2 years from now, that gear is just sitting down in like the bottom drawer of their desk or something like that.
Right.
So with an F&B, they can just return it, and they have a lower monthly payment, and everything's just seamless, and they get rid of that equipment. So during this current whole COVID issue, we've definitely seen more F&B transactions.
Right.
What sort of thing? Yeah, what I know, at least from the times that we've worked with you, you guys will finance both the hard cost, the hardware and licensing and things like that, but also project fees for that too. Is there things that you find that you really don't get covered, or that you don't recommend that get put into a financing deal, or is it really everything, roll it all into one? What do you find is
my go-to answer, if someone asks me if they can finance it, is yes. So if bottom line, right? If they have a bunch of equipment, they have a bunch of needs, just send it over to us and we'll get it done.
Right.
We like doing hardware, we like doing software, but we can do services components, we can do shipping, we can roll in labor. It all depends on a bunch of different factors, but just short answer is yes, we can do it. There's nothing that we really don't like. So send it over our way and we'll get it done for you guys.
We actually have a comment from Stefan, our COO. It's a good one, actually. It's a question I didn't even think about. Stefan threw us up here. Can you refinance an existing lease or equipment financing, especially in this current COVID environment, like you can refinance a home mortgage? Which is a great question.
Great question, actually.
I didn't even think about that. That's why he's a COO, I suppose.
Yes. We do have the ability to do that. Yes, you can refinance an existing lease for equipment financing. Sometimes it may not make sense, depending on how the current lease is structured. It could end up being a little bit more expensive, but that is an option to get you guys a reduced payment that will spread out over a longer length of time.
Gotcha.
So to help out for cash flow, and just to get you a lower monthly payment, I think it will be beneficial, but that is definitely something we can do for sure.
Cool. And the other one that was interesting that he has another one. He's on fire today.
Yeah, keep going.
If you can refinance, can you then roll new equipment into this new agreement and then make one big mass new agreement, or a new schedule or something like that? How would that be possible? That's something people would want to do, you think?
Oh yeah, I think that is something that can be done. It's going to take a little bit of a credit review and make sure that everything's in line from a customer perspective that we can be able to do that.
Right.
There's certain structures that may not be available with that certain option, but it's something that we can definitely do. We can add some new equipment and then add some old.
Cool.
It's something I've done before, so yes.
Yeah.
Going back to that.
Awesome. Yes is a great answer. Yeah. Yes, we can, but let's do this. That's kind of that's kind of the value model.
Sure, we can do it, but is it the right thing?
The right thing.
Out.
Yeah, exactly. So just kind of like that's a great questions. And beyond this, like COVID-19, what are some other trends you've seen before this all happened? Maybe things go back to more, let's say, normal or commerce as usual kind of scenario. What are the trends you were seeing as well, like this in terms of refresh rates and that sort of thing?
Yeah, I mean, one big one that we're noticing, or me personally, is people are starting to put annual payments on licensing agreement for security software. Because you recognize discounts, right? So say you buy it, you're looking for a licensing agreement for 12 months and it costs 40 grand. But say you bump it up to 3 years and it costs 100 grand. So you're recognizing that savings instead of by renewing it each year for 40 grand and paying, $120,000. You pay it up front for 100, and the financing fee is minimal and still below that threshold. So you guys are saving money, and they only have one annual payment each year, and it's something that we've actually seen quite a bit of over the past couple months.
Yeah, that's good. I had a question very similar to that. That we're seeing a lot of movement towards, obviously away from on-prem. We've been seeing for a while, but especially now, we're seeing a lot of interest in things like Azure Cloud or moving to Office 365. And traditionally, those are month to month, which I know obviously not going to be able to finance, but they do have discount structure between 1 and 3 year subscriptions if you pay up front for 3 years. Is that something that we can do, at least even if it's not a software license, even if it's like a service?
Exactly. Yes.
Okay.
Going back to that answer, it is something we can do. Reserved instances was actually something that we were actually really focused on and had a big approach with working with AWS and Azure, and just realizing that, hey, well, we had one of our vendor partners came in and kind of educated us on the whole reserved instances model, and we were all kind of like, light bulb moment. Okay, well, so we can finance this stuff, and it's pretty cool. I mean, the more you dig into things and the more you realize what exactly can be financed, it's exciting. I mean, for me, being a financing nerd, so
yeah. What would you say is like the minimum for that? Because if we've got a client that's looking at, I was moving some workloads into Azure, moving something into Azure, and I'm guessing a 1 year reserved instance isn't going to be enough. They'd have to bump it to a 3 year. But is there, aside from that, are there minimums to think about in terms of what that monthly cost would be, or what that would be, or if that's all they're doing with it?
Yeah, no, that's a good question. In terms of minimum, do you mean the minimum dollar amount or minimum usage, or?
No, I'm thinking, and maybe I'm way off base here. You guys tell me I was out of my depth, but I'm thinking for financing something that has physical, like a hardware, there would be easier to do because there's a physical thing. But if you're doing financing like an Azure service, is there a different like requirement or a different threshold that you have to meet in order to qualify for it? Since at the end of it, it's not like you could use that purchase as collateral. It's cloud service. It's not physical. Or does that not really matter? Am I completely off base?
It's I mean, obviously, having a hard asset that we can collateralize is pretty big, but with everything transitioning to software in the cloud, it's getting easier and easier for us to just have a much wider credit window for that type of product. And it's not a huge difference. You'd be surprised. I mean, typically with customers that you wouldn't necessarily think could get it done, we find a way to do it. So even when it's just a solution like that.
Yeah, I mean just ourselves, we're anticipating somewhat less amount of equipment available in the channel because of shortages, let's say production delays, that sort of thing. So we're looking at like, well, how can we still meet our customers' needs? How can we keep them up and running, or transition to a more complete remote solution that doesn't require hardware. So this is great. This is like, I mean, I'm super excited now because I'm just thinking about possibilities.
The gears are spinning now.
I'm like looking at Justin over the screen, I'm like getting like real, like boom, because
it really does put things that were
Yeah.
out of reach for a lot of clients.
Right.
At least I'm thinking of that are like, it's not a good solution. That's going to be too expensive. But spread over the discount that you get from Azure for doing a 3-year reserved instance, but then being able to do it monthly instead of hitting it up front, that's going to be huge, I think.
And the other part, I think the other part too, you start combining it like, hey, look, you have, this hardware refresh was X dollars, but now we can do it this way, and it ends up being almost the same amount of money. And in the end, you probably get a more complete and more robust solution.
Yeah, better
really
value.
Cool. Better value. So that's awesome. We're going to talk after. Where's my ideas?
Yeah,
not done yet. I know it's for this meeting, but this was his call. Beyond that, I'm trying to. Is there anything you guys think is important that we missed that we should know, that we should tell our audience that maybe we didn't know?
Another question I was thinking of too. Do you guys have anything specific, any specific programs or anything specific you guys are doing around the current COVID situation, or specifically, I'm guessing like work from home, things that you're seeing that are coming up? Anything geared towards that specifically, or is it more just that there were the products and stuff that you had kind of slotted nicely to that, or walk me through?
I mean, we touched on a little bit earlier with the F&B kind of stuff. Typically, when customers are just purchasing, I mean, we've just seen a lot of laptop purchases, a lot of phone purchases, and people are not sure how long they want to have it. So, we put them on F&B for 24 months. And so they have that gear, they get, negative interest rate. And then at the end of the term, they just kind of return it. But that's kind of our focus. We also have a website, a COVID-19 research center with bullet points on how to get an SBA loan, how to do all this other stuff related to running your business. And it's I'm trying to find the link for it, but it's pretty cool. Another one that we're seeing that's really popular is the deferred payment option, where we can pay you guys, we pay all the deposits, pay all the down payments, pay everything that's needed right there. And then the customer will not have to pay a dime up until 90 days.
Wow.
So if you're buying a solution right now, you won't be having to pay it until July, which is give some breathing room for some customers that may not necessarily understand what's going to happen in the future, like we all don't know. So
true.
Deferred payments are big, and we also have something that we call step payments, which are getting, people are trying to get more creative by using those as well, where the payments will start lower, say on the first payment, and then slowly increase as the lease goes on. So say you start with $1,000, and the next month it's like $1,000, or the next 6 months later it's $1,050, and then 6 months after that it's 2,000 or something, and it just gradually grows as the economy gets healthy again.
I can see that really helpful if you're doing a migration to like an Azure instance or a cloud instance, and then you can say, okay, listen, start smaller, it's going to grow, you guys are going to be in a better position 90 days. It could be, especially if it's spread over 3 years, if you think about like a big kind of like longer term, even if it's like a downturn, 3 years is a long time, and you can make it to that point, but you have the technology you need to survive or grow your business. That could be the thing that gets you over the edge, because if you touched on security a second ago, and I think that's one of the areas that Justin and I stay up at night worried about this, because we think that that's going to be a huge vector of people being attacked in ways they never thought of before. Like, a new level of, people are going to go from like, all right, let's be vigilant, let's be careful, to a level of survival, and which then exposes them in a deeper way.
Yeah, it's definitely topic for an upcoming episode. We were discussing this morning was the idea of perimeter security is gone. So we are seeing more of an interest in those security products that have more of a software component and more of that licensing life cycle, as opposed to buying hardware and being set. So I can definitely see that coming up as well.
Yeah, it's definitely, so those security services and the next level product is where it's at, rolling out multi-factor and that sort of stuff. So I think, we're at 25 minutes, which is a long time about finance. I know we can talk about for hours, but it's interesting. I always wonder, whatever you do, I talk about my stuff, like, people are afraid to get me started talking about IT work and security and all that other stuff. It's like, oh, could you just stop? And I'm sure I can tell you guys are the same with the financing stuff. It's like a terrible thing. Like, don't talk to him at parties.
Yeah, right.
It's just that type of.
You're gonna get
that was a quick 25 minutes.
Yeah,
right. It was that's what it is. It's a quick 25 minutes. You're like, holy shit. I mean, like, I feel like I learned a lot in 25 minutes. That was great.
Yeah, definitely.
Super cool. Is there anything else you guys want to put out there that's important that we should know, or thoughts and that sort of thing?
Yeah, I think we're just staying positive, getting defensive here as we go through all this COVID-19 stuff. We're full steam ahead. Nothing's changed for us. So
awesome, great guys.
We're still buzzing out there. I mean, people are purchasing gear. Every customer is just looking for new things, and it's exciting. It's scary. But everyone just keep fighting, man. Be on offense. Don't play defense. Let's go.
Yeah,
exactly. That's the key here. Is like this keep moving, and it's as much as these bad things happen. I'm personally, there's some exciting things that are coming out of this in a way that maybe in the end, in the long run, will be a net positive. We can hope for a lot of people, for businesses to grow or learn new things or change, and that's some of the things we're going to explore in some later episodes. I think about a perimeter loss and working from home and things that we never even thought were possible. 3 months ago. So that's
and
great.
Another thing I just want to touch on too is we're talking to a lot of CFOs every day, and a lot of them are changing their focus where they were going to pay with cash. They want to start budgeting to hold on to that stuff. So financing is getting a little bit more important, and people are starting to entertain it a little bit more. So
yes, that's exactly true. I mean, everyone I know is like, well, how can I make this go out? How can I be fluid for longer and keep everything moving along, which is really the key. So with that, I'm going to say thank you so much for coming on. Really appreciate it.
Yeah.
If you guys have any questions, please shoot them to us on our website. We're going to post this up on YouTube and Facebook. We're going to put these up there, and we'll be here on Friday. We're going to talk about something that's near and dear to my heart. Not to everyone else, but something that like I obsess about, which is backup from a top level, like a 30,000 foot view, because it's such a critical thing that I think people ignore. It's always at the back burner, and then when you need it, it's always like, well, how did this happen? So at Valiant, we try to get ahead of it, and we're gonna do a top view, and if we get some good reception, we're gonna go deeper dive into it. So thank you so much, and please like and subscribe. It's really important. Thanks a lot. Have a good day.
Subscribe.
All right. Bye now. Take care, guys.
Take care.